What's up guys, Coding Jesus here. Guys, in today's video, I'm going to be making a tier list of all the finance careers that I believe are worth mentioning in a hopefully under 20-minute video, discussing their pros and cons and kind of breaking down for you guys where I believe they rank. Now, this is my opinion. If you guys have a different opinion, that's totally valid. If you agree, leave that in the comment section. If you disagree, also leave that in the comment section. But hopefully this video can shed some light for people that are new to the world of finance or are considering various careers and help them understand which path probably is best for them to pursue. Okay, let's get into it. So on my screen right now, you are going to see a tier list. Now this tier list has a couple of different careers here at the bottom. Okay. These careers are equity research, investment banking, accounting, investment advisor, private equity, portfolio manager, quant trading, risk manager, sales and trading, and venture capital. So we have really a lot of careers to discuss today, and we're going to be ranking them based off of a tier list. S being the best, so S tier. Then we have A, B, C, D. If you've gone to school, you know what these grades mean. S is the best, D is the least best. Very easy to understand. Okay, let's start out with the career that I think is least impactful and probably has the least amount of longevity. And that is, can you guess? Accounting. So before I place accounting in a box here, to me, when I think of accounting, I think of long hours. It's probably the career path here that is most automatable, if that's even a word. It's one where you're probably paid the least. It doesn't have a very good reputation in terms of self-deletion rates, and it just doesn't excite people as much as it should. Okay, when you think of an exciting career, you think of something that's on the cutting edge of technology, of something where you work with high net worth individuals. Accounting is a lot more software facing. It's a lot more book facing. It's a lot less client facing, so it's less kind of sexy than investment banking. And it's a lot more, I guess you can say, mundane and boring. Applying a given set of rules, a given set of principles to various companies' financials and spitting out results. So I'm going to put accounting in, I'm going to put it in C tier. Okay. The next career path is a career path that I almost went down. And if you can take anything from this video, it's I want to help people who are very smart not become PowerPoint creators for the rest of their lives. Now, in this career path, you do a lot of work for the sake of doing work, which means there's a lot of face time. Face time is the act of being in the office, despite the fact that you have nothing to do, simply to show that you're dedicated to the actual role. Now, to me, that's an entirely pointless waste of time. But to people that are more in the, I guess you can say more boomer culture oriented, it shows that you're committed and dedicated, despite the fact that it only makes you less productive because you start hating being there. Okay, this is investment banking. Now, in investment banking, you're going to need to force yourself to be a robot. That's one of the cons. You pretty much need to be a cookie cutter finance bro that wears sweater vests and quarter zips. Okay? You can't have tattoos. You can't have long hair. You need to be clean shaven. You need to be that like clean finance bro. Okay? At lower levels, it's all about grunt work. It's all about creating Excel models that focus on valuations, comparable company analysis, discounted cash flow analysis. There's a bunch of other forms of analysis that people perform on companies. They focus on raising money, mergers and acquisitions, strategic advisory. But at the higher levels, you're not doing grunt work. You're more so managing relations with clients. Okay? The culture here is very much personality oriented. You kind of got to be a bro. Okay? It's a lot less meritocratic and it's very hierarchical. There's a defined hierarchy. There's a defined structure. You'll see in other careers that I discuss, it's a lot more flat. There is less of a structure. There is more transparency when it comes to being able to communicate with various echelons of the organization. But this is very hierarchical. Now, I mentioned a bunch of cons, but what are a couple of pros here? Well, one of the pros is that you're paid a lot. Now, you might be paid a lot, especially coming out of school. You might be hitting that 150, 200K mark, even more. But on a per hour basis, because the hours are so long, guys, you're probably making around 20, 25, maybe $30 an hour. which is not very competitive when you think of other careers in the world of finance. What's also good about this career is that it has a low technical bar to entry. Pretty much you need to be good at Excel and nitpicking people's PowerPoints, and that's about it. So the compensation to knowledge ratio, I think that's the best way to put it, is quite high. So you're paid a lot relative to the amount of information that you actually need to understand. Now, if accountancy has the highest self-deletion rate, I would say investment banking probably has the highest murder rate, because if you're going to work yourself to death in any of these careers, it's going to be investment banking. There's a TV series on this called Industry. It's very fun. And I'm going to place this at, you might be thinking B tier because I made it sound pretty bad, but I'm actually going to place it in A tier. I'm placing it at A tier because investment banking actually unlocks a lot of other career paths. And so if you are a solid investment banker, you put in your 2-3 years of work, you can transition to private equity, venture capital, and under other industries that we'll speak about today. Okay, the next role here is going to be, let's talk about investment advisor. Okay, an investment advisor in today's day and age is focused a lot more on educating than doing. I think this career is going to become a lot less relevant as financial education becomes much more prolific, as people learn a lot more about how to invest their own money and how to plan their own financial future. And millennials are picking up on that trend, okay? Now, what you do here is you pretty much discuss people's investment time horizon, their risk profile, and their objectives. And you create an investment strategy for them such that they can achieve those investment goals, whether that's I want to buy a Lamborghini in 5 years, or I want to build a nest egg for my retirement in 30, 40 years that I don't want to touch for that period of time. Now, what you'll probably do is you'll still probably underperform the benchmark here, because you're going to be picking essentially stocks, picking ETFs, picking an investment strategy that's going to be different from the market. But regardless, you're going to be collecting a fee at the end of the day for it. And that fee is going to be paying your bills. Now, I would say investment advisory is probably one of the most chill roles here. It's probably one of the most chills because you put in your 8 hours, you come home, you pet your dog, you play video games. And despite the fact that ChatGPT can essentially fulfill your role, ChatGPT can't provide financial advice. So it doesn't have the credentials required to say, I'm a certified, investment advisor. So while I do think that investment advisory is going to be diminishing in the future, kind of like accountancy, I still think it has another 3 generations to go. So I'm going to put investment advisor as B tier. Okay. The next thing I want to talk about is sales and trading. So sales and trading is different from quantitative trading. In sales and trading, you work to secure clients. Clients might be large conglomerates. They might be individual large investors. You pitch them business opportunities. You focus on executing buying and selling for these institutional clients. And you often specialize in a given market or asset class. So somebody will sit on the gold desk. They will sit on the equities desk. They will sit on the currency or commodities desk, and they will work with clients of various sizes. Now, when you first start, you're going to be working with very small clients, a very small book. You might be shadowing another sales and person in sales and trading. The difference as you move up in seniority here is the amount of risk and the amount of P&L impact that you can have on the organization. So as a VP in sales and trading, you're managing a trading book. You have a distinct product. You might be working on something like short-term interest rates or short expiry interest rate options. But then as you move up, you might get larger risks, more responsibility, etc. And so you might have, for example, a client that says, I would like to buy 1,000 lots of X, or I would like to sell 10,000 lots of Y. Give me the price. Give me the best price that you can have and execute this trade for me. Okay, the culture here is still very bro-centric. It's less hierarchical than investment banking. It's more chill in terms of the hours because you're really limited by the hours that the market's open. So theoretically, when the market's not open, there's really nothing that you can be doing. And it's a lot more client-facing. So while in investment banking, you're doing a lot of grunt work, you're sitting in front of the computer for 12 hours a day, your eyes are bleeding. In sales and trading, you're speaking to people, you're on the phone, you're talking to clients and talking to them about their own personal investment strategies and what they would like to execute at size. So you're dealing with these large institutions. I would say that the exit opportunities are quite solid. You can move to prop trading, hedge funds, asset management, etc. And with regards to job security, I think that's something that I want to speak about with every job here. And I always give people the same exact explanation. It's that your job is only as secure as your ability to perform, regardless of the industry. So I don't really like talking about job security. I would say that sales and trading is just as cutthroat as investment banking in terms of performance. And obviously, a lot more cutthroat than something like investment advisory. I'm going to play sales and trading in B tier. All right, B tier. Right there. Okay. You know what? A tier. Let's talk about the next thing. Equity research. Unlike other careers where an analyst would sit at the bottom, in equity research, you kind of sit at the top, okay, as an analyst. At the top, in equity research, what you do is you manage relations with companies that you cover, and you pretty much produce research papers for clients of the bank. So you will be doing deep dives into company financial statements, quarterly and annual financial statements. You might be asking questions to C-suite executives at those at their quarterly financial performance meetings. Okay, you essentially draft large reports for institutional clients for the bank that you work for. And you are there to give them a recommendation. You are there to build financial models, valuations, and write reports that essentially say buy, sell, or hold. Okay? And you might provide a price target for any of these. Now, something that's really cool is the degree of what I mentioned is your proximity to C-suite executives. So you'll be on those calls, on those kind of earnings calls, asking those questions. So if you ever hear somebody on an earnings call saying, "Can you provide me more color about XYZ?" or you did some initiative about going into the Asian market. Tell me about the progress that you guys have made there. That's the equity research analyst. Now, they might cover one or two stocks. They might cover more than one stock. More than one or two stocks, right? So an equity research analyst will really focus and hone on an industry, but more in particular, a basket of stocks within that industry. What's kind of cool about equity research is you travel a lot, you visit a lot of clients, and you attend conferences and company meetings. So you're not always static in front of your computer, just kind of sitting there and doing whatever. I'm getting a lot of glare from the sun. Give me a second. You're not as trapped, I would say, as an investment banker. What often happens in investment banking is I would say 30% of investment bankers, they leave the industry, they realize they hate it, and they go and become like a monk in Thailand floating on a mountain. In equity research, I think you gain a lot more skills that are transferable to other industries. And so you're not as trapped or pigeonholed into this particular niche as you might think. I would say that equity research is not a growing industry. It's a lot more repetitive than people think. You're really performing the same analysis on various different companies just around earnings season, and it's really a grind. You're going to be making 30 to 50 page reports, and you're going to be sitting in front of Word or PowerPoint, not PowerPoint, Word or Excel, and crunching out those numbers and placing them onto that report a lot. I also think that with just the kind of like investment advisory, with the increasing relevance of people doing their own research online and just the total amount of information that's available for free out there, I think that the world of equity research is going to be diminishing in popularity, especially due to the fact that passive investing is becoming a larger and larger trend out there. I'm going to put equity research in the B tier. Okay. Let's talk about venture capital, so VC. So essentially, as a venture capitalist, you raise capital from limited partners like pension funds, family offices, and then you really invest in early stage startups, many of them which that will fail, but some that will succeed. Okay? Venture capitalists, and by the way, on those successful investments, you're looking to make like 50 times your money. So it's very much early stage, shotgun approach, try to make as much money as possible. Okay. Venture capital, I would say, requires a myriad of skills, which make it more attractive to me. And you have to be highly articulate. You have to have strong financial modeling skills. You need to be decisive and use your intuition. You need to be good with people, and also good, just being able to sit in front of a computer for 8 hours a day and grind. Okay. You'll be doing a lot of things. You'll be sourcing deals, executing deals, providing support for portfolio companies that you've invested in, networking and building your brand. You'll be fundraising and managing relations with limited partners. And you'll be doing a lot of other kind of internal operations and tasks, okay? The motto here in this industry is get rich slowly. So if you're looking to gamble with somebody else's money, probably look to a different industry. The pay here is definitely above average. Oftentimes you see people in venture capital that are Harvard MBAs and ex-investment bankers or ex-consultants, right? So these people are probably making at least $200,000 a year in total compensation at age 30, post-MBA or post their stint in investment banking. You spend a lot more time here on qualitative tasks than you do in private equity or investment banking. When I worked at BitMEX and was rotating in their venture capital division, right out of college, my schedule was literally packed with meetings, speaking to companies about their initiatives, managing those investor relations with those companies, okay? While a lot of these other industries are kind of like gateways into the world of finance, I would say that venture capital is one of those industries that are the exit opportunity. So it's the end game. A lot of people are looking to make it into venture capital after spending time in sales and trading, equity research, investment banking, etc. I would say that this industry is probably one of the least likely to be disrupted, and there's also a solid work-life balance here. And I think that's why a lot of people are interested in the industry, and a lot of people in the industry are interesting. Okay, you actually have a ability to make a positive and tangible impact on the world with venture capital because you'll be investing in products and people that are looking to make meaningful changes. So I'll put venture capital in S tier. Okay. The next position I want to talk about is risk management. Okay. In this position, if everything goes well and you're doing your job right, you get a pat on the back, if that. Okay. If everything's collapsing around you faster than a Nature's Valley granola bar, you're the first one to be blamed. Okay, guys? So usually the risk manager is somebody that has experience previously trading or in quantitative research. Maybe they were a risk analyst at some credit modeling agency. But the general idea here is that you need to be very intimately familiar with the holistic set of risk metrics to run a bank or a prop trading firm. That includes market risk, portfolio risk, credit risk, operational risk, etc. Okay. These people usually understand also the very intimate details of a trading system, and they have between daily to weekly meetings with relevant divisions in the industry to actually steer the direction of the company from a risk perspective. I would say that the benefits here is that you can really work in any financial services company as a risk manager. You solve problems that are both qualitative and quantitative. You're involved on the technical side and on the non-technical side of the organization without necessarily needing to be a coder per se. You have a good work-life balance, above average compensation, and the role is very proactive. I'm a proactive person. I like to reach out. I like to put myself out there. I like to take initiative. And if you're that type of person that likes to always be on guard but also feel comfortable leading projects, I would say risk management's for you. And obviously the downside as a risk manager, very high stress. Very, very high stress position, guys. I would put risk manager in A tier. You're always going to need somebody to manage risk. And I would say that the role is very diverse and interesting. Okay, the next role that I want to talk about is portfolio manager. Okay, PM. Portfolio managers exist at a lot of places. Now, when I'm talking about portfolio manager, I'm not talking about your basement Discord mod at on a day trading Reddit, okay, who manages his mom's money. I'm talking about somebody that works in Balyasny, Point72, Citadel, these very large organizations that have portfolio management investing in hedge fund divisions, okay? Portfolio managers, guys, they make the final trading decisions and they manage the entire portfolio of a company. That might be strategy-based portfolio, asset-based portfolio, market segment-based portfolio, country-based portfolio, etc. You are literally managing the entire life cycle. So you are managing the compliance of your division, the IT, the execution, everything from strategy generation to risk and compliance. That's on you as a portfolio manager. You're literally hiring administrative staff, speaking to data providers, hiring software engineers, procuring Bloomberg terminals, etc. You're really managing a business as part of a larger business, okay? I would say you work around 60 hours a week here, but you're on call most of the time because the market is closed a couple of hours a day, if that. So as long as the market's open, essentially you are active. I would say that the stress levels here are very high because you live and die by your performance. You need to have an answer to every action that you take and a justification, okay? before you can even land a position as a portfolio manager, you were most likely an investment banker. You worked as a hedge fund analyst. You had a decent track record of performance as an equity researcher, if that was your previous career. And now you're thinking, I want to manage my own investment decisions and take on a lot more responsibility and have a lot more capital on the line. Now you're probably thinking, I can become a portfolio manager because I have my own, $10,000 portfolio on Robinhood. Okay. I would say that the world of portfolio management is a lot more diverse and a lot more broad at the institutional level than on the personal level. Yes, you can be your own personal portfolio manager if you'd like to give yourself a bombastic title, but on the institutional level, guys, there's just so much more to do than opening up Robinhood and buying and selling stock that I can't even go into it in this video. It'll make this video too long. Okay, now in terms of compensation, I would say this is probably one of the highest paid industries you can get into. I mean that if you're managing a fund north of, a $250 million, even something as small as 50 million, you can pull in at least $450,000 a year, and even into the low seven figures. Your bonus here is heavily based on your portfolio's P&L, and it's probably the chunk of your compensation. I would say that on average, you can probably expect 20% of your P&L to be paid out in terms of team year-end bonus. I have a friend that runs a $100 million fund. His team has around 6 other people. They doubled their AUM this year, and he took in around $8 million in total compensation. He actually lives in the Cayman Islands. I visited him. You can see all that, kind of my personal travels on my Instagram if you like. But yeah, super, super, super lucrative industry. A great movie to watch if you'd like to see the life of a PM and how it differs from an investment analyst, I would say, is Fair Play on Netflix. And there's also obviously the series Billions. So I'm going to put PM in S tier. Okay. Let's talk about private equity. Okay, I'm going to leave the best for last. What private equity firms will do is they will buy companies that are usually in distress. They will overhaul those companies and look to sell them for a financial gain. Okay? Unlike venture capital, where you're also buying companies, private equity companies usually focus on A, mature companies, and B, companies that are kind of like downtrodden or down on their luck. Companies that have a strong previous track record of success, but which are now struggling to actually perform well. Okay? The whole goal here is to increase the company's investment attractiveness and increase their investment worth. Okay, so what they will often do is implement dramatic cost-cutting practices. They will restructure management, and they will essentially take on the purchase of companies that other people would be reluctant to take on simply because the company's performing so poorly. When you think of private equity, guys, you think of companies like KKR, Apollo, Blackstone, Carlyle Group, etc. Okay? Now, private equity firms will usually hold that investment for, I would say, at most 10 to 12 years. Okay? And while that money is invested, limited partners are not able to reap a reward or take out money from the fund. Okay? Now, large private equity firms will usually hire juniors that come from investment banks. So that's why I put investment banking in A tier as opposed to B tier, because private equity is an exit opportunity for investment banking. So you'll rarely find people that are in private equity as starting off as an analyst that don't have investment banking or equity research experience or sales and trading experience even, okay? So usually these people come from elite boutiques and investment banks. Now, if you're looking to be the monopoly man, if you are looking to be a rapacious financial oligarch or vulture, this is a career for you. Private equity has taken on a lot of criticism over the past couple of years. When you think about what private equity does is they buy something that's distressed and they flip it for a profit. Think about it like flipping a home. You buy a home, you renovate it, and you sell it for more. Oftentimes you'll find private equity firms, let's say in real estate, buying up entire housing blocks, kicking everybody out, maybe making the apartment complex a little prettier, bringing in new management, and then selling it for more. They will fire 30% of the workforce and restructure the internal operations of that company and sell it for a 30% profit 2 to 3 years from now. Okay. What's really cool about private equity and compared to other industries that are a lot more grindy is that it's less grindy. You travel a lot more. You have a better work-life balance. The work is more client-facing. I would say the work is more interesting than other industries like investment banking, and the pay is a lot better. A lot may be a bit of an exaggeration. You're going to be making more than an investment banker, but to what degree depends on where you work and who you work for. Hence, I am going to put it in A tier. The last, but certainly not least, and I'm definitely biased here because I work in this industry, is quantitative trading. Guys, in quantitative trading, you are really working on the tip of the spear in terms of technology. You're focused on working at companies like Optiver, IMC, large companies that focus on trading various financial assets and implementing their own strategies. But you can also be working at smaller companies that do this, people that are maybe 20, 30, 40-man teams. And this is highly, like I said, trading related. Now, what I love about quantitative trading is that there's very little face time. A lot of it is focused on meritocracy. The hierarchy is very flat. You take a lot of responsibility very early on, and it's very performance-based. That's what I like. I don't want to be in an industry where the color of your hair matters. I want to be in an industry where your ability to perform, your intelligence matters, and that's a lot of what quantitative trading is looking for in people. In terms of cons of quantitative trading, I wouldn't say there are many. Obviously, like I said, I'm biased, but you work with very smart individuals. The work is very fun. You feel like your work is very impactful, which I think is one of the most important things in a job that I'm looking for. In investment banking, for example, just to kind of compare quantitative trading to another industry, in investment banking, you'll often do work for the sake of doing work. So you'll produce a PowerPoint that will never get looked at, or you'll produce a report that will be thrown in the garbage. In quantitative trading, every minute counts, okay? People are not going to have you do work for the sake of doing work because that's money that's wasted, okay? And all the work that you do will be put into production, once it's reviewed and approved almost immediately, and you will see that immediate tangible impact on your work. So venture capital, for example, you might make an initial seed investment that might take 5 years to manifest. Quantitative trading, you will make you might spend 2-3 months developing a robust system with other people like quants and traders and developers, but you will see that immediate impact the day that it's released. The only con that I can think of off the top of my head here, guys, right now is that burnout is real. So if you're not taking those mental health days, that time off, it's very easy to get burnt out because it is stressful. Kind of like portfolio management. You live and die by your own performance, and the industry can be a little ruthless. I'm going to put quantitative trading in S tier. Of course, it matches the pay of a lot of these other industries. And you're paid obviously based off your performance. If you're a trader that brings in millions of dollars for the firm, you can bet your bottom dollar you're going to be paid a very nice bonus at the end of the year. Alrighty, guys, that was the tier list. I hope you enjoyed it. Guys, if you would like to become a consulting client of mine, if you'd like to break into the world of quantitative trading, you can do so in the Calendly link on your screen and in the description box below. If you'd like to become a patron, get early access to these sorts of videos, you can do so by visiting my Patreon, link in the description box below, guys. And if you'd like to see my life behind the scenes, I don't only post quantitative trading related content on my personal Instagram, I post kind of just like my life in general, vacations, driving around with my motorcycle, etc. So if you're interested in that sort of stuff, you can follow me on Instagram. Feel free to like and subscribe. You guys are the lifeblood of this channel. Hopefully you enjoyed this video, guys. Thanks for watching. Peace.